Moderna is a biotechnology company focused on developing mRNA vaccines and medicines. Unlike traditional pharmaceutical companies, Moderna has built much of its research strategy around messenger RNA technology, which can provide instructions to cells to produce specific proteins and stimulate an immune response. The company became globally recognized during the COVID-19 pandemic after developing its mRNA COVID-19 vaccine. The vaccine became one of Moderna's most important commercial products and generated billions of dollars in revenue during the pandemic period. This rapid growth transformed Moderna from a relatively young biotechnology company into a major global pharmaceutical business. However, the financial situation changed as the pandemic moved into a different stage. Demand for COVID-19 vaccines declined significantly compared with the peak pandemic years. As a result, Moderna's revenue also fell sharply. This created a major business challenge. How can the company replace billions of dollars in COVID-related revenue? Moderna's answer is to use its mRNA technology to develop a broader portfolio of products. The company is working on vaccines and medicines targeting several areas, including influenza and cancer. The strategy is important because relying heavily on one product creates financial risk. If demand for that product falls, revenue can decline rapidly. A diversified portfolio can provide more stability. For Moderna, the goal is to turn its mRNA platform into a technology that supports multiple commercial products rather than depending primarily on COVID vaccines. The company is investing heavily in research and development to achieve this goal. Drug development is expensive and uncertain. A potential vaccine or medicine must go through laboratory research, clinical trials, and regulatory review before it can become a commercial product. Many projects may require years of investment before generating revenue, and some candidates may never reach the market. This makes Moderna different from a traditional consumer company. A company selling physical products can often produce and sell them relatively quickly. A biotechnology company may spend hundreds of millions of dollars developing a product before knowing whether it will succeed. The financial potential can also be much larger when a product succeeds. A successful vaccine or medicine can generate billions of dollars in sales and potentially create long-term value for shareholders. Moderna's business model can therefore be summarized as research, develop mRNA technology, conduct clinical trials, obtain approval, launch products, generate revenue. The company's future depends heavily on whether its new pipeline can replace declining COVID revenue. If products targeting influenza, cancer, and other diseases succeed, Moderna could create several new sources of revenue. If development projects fail or take longer than expected, the company could continue facing losses while spending large amounts on research. The key business lesson is simple: a breakthrough product can create rapid growth, but long-term success requires turning innovation into a diversified portfolio of products. Moderna's revenue story shows how quickly the financial performance of a biotechnology company can change when demand for a major product rises and then declines. In 2025, Moderna generated approximately $1.94 billion in revenue. This was significantly lower than the extraordinary revenue levels the company achieved during the COVID-19 pandemic. During the pandemic, demand for Moderna's COVID-19 vaccine created a huge commercial opportunity. Governments, healthcare organizations, and other customers purchased large quantities of vaccines as countries worked to protect populations and reduce the impact of the virus. Those sales transformed Moderna's financial position. However, vaccine demand eventually declined as the global health situation changed. Vaccination programs became more established and the market moved away from emergency-level purchasing. For Moderna, this created a major revenue challenge. The company could no longer depend on COVID-19 vaccine sales to generate the same level of income. Instead, Moderna began focusing on building a broader product portfolio. The company is developing new vaccines and medicines in areas such as influenza, and cancer. The strategy is straightforward: replace declining revenue from one major product with revenue from multiple new products. This approach is important for long-term financial stability. If a company depends heavily on one product, its revenue can become vulnerable when demand changes. A diversified portfolio can reduce that risk. Moderna's mRNA platform gives the company an opportunity to develop different products using related technology. However, developing new medicines is expensive and uncertain. A potential product must pass through multiple stages of research and clinical testing before it can reach the market. Some candidates may succeed, while others may fail. This means Moderna must spend significant amounts of money today in the hope of generating revenue from successful products in the future. The company is also using partnerships as part of its business strategy. Partnerships can provide access to additional expertise, technology, distribution networks, and financial resources. They can also help share the risks associated with developing new medicines. From a financial perspective, Moderna is therefore moving from a pandemic-driven business toward a more diversified pharmaceutical model. The goal is not simply to replace COVID revenue with another single product. The larger objective is to create several commercial products that can generate revenue over many years. The basic strategy is COVID revenue declines, invest in research, develop new products, obtain approvals, launch products, create new revenue streams. Moderna S1 $94 billion in 2025 revenue shows the scale of the challenge. The company remains a major biotechnology business, but it needs successful products to return to stronger growth. For investors, the important question is whether Moderna can convert its scientific technology and research pipeline into sustainable commercial revenue. The key business lesson is high revenue from one product can create rapid growth, but long-term financial strength requires diversification and continuous innovation. Moderna operates in a biotechnology industry where developing new vaccines and medicines requires large investments. The company must spend many years before some products can generate significant revenue. One of Moderna's largest expenses is research and development, or R&D. In Q1 2026, Moderna spent approximately $649 million on R&D. This spending supports laboratory research, clinical trials, technology development, and the testing of potential vaccines and medicines. Clinical trials are especially expensive. Before a new treatment can reach the market, it must go through several stages of testing to determine whether it is safe and effective. These trials require medical professionals, research facilities, participants, data analysis, and regulatory work. Moderna is investing in several areas, including influenza, cancer, and other mRNA-based treatments. The company hopes these investments will create new commercial products and replace some of the revenue lost from declining COVID-19 vaccine demand. However, high R&D spending also creates financial risk. A research project can require hundreds of millions of dollars and still fail to produce a marketable medicine. If a clinical trial does not produce successful results, the money already spent cannot simply be recovered. This makes biotechnology different from many traditional businesses. At the same time, successful research can create enormous financial value. A successful vaccine or medicine can generate billions of dollars in sales and potentially become an important long-term source of revenue. Moderna's financial position is supported by its large cash reserves. At the end of Q1 2026, the company had approximately $7.5 billion in cash and investments. This gives Moderna significant financial flexibility while it develops new products. Cash is particularly important because the company is going through a period of lower revenue. Strong reserves allow Moderna to continue funding research even when current sales are weaker. However, cash is not the same as profit. If Moderna continues spending heavily while generating relatively low revenue, its cash balance can decline over time. Management therefore has to find the right balance between investment and financial discipline. The basic model is cash R&D investment, clinical trials, successful products, sales, revenue growth. For investors, Moderna's high expenses can be viewed from two perspectives. The negative side is that large R&D costs increase current financial pressure. The positive side is that research is necessary to create the products that could drive future growth. The company has approximately $7.5 billion in cash and investments gives it time to pursue this strategy. The main financial challenge is turning that spending into successful commercial products. The key business lesson is In biotechnology, spending on research is an investment in the future, but successful investments must eventually produce products, revenue, and profitability. Moderna entered 2026 with a major financial goal: reduce costs while rebuilding revenue through new products. The company expects revenue to grow by up to 10 in 2026. After several years of declining COVID-19 vaccine sales, even moderate growth would be an important step towards stabilizing the business. The main challenge is that Moderna cannot rely on its COVID vaccine to generate the extraordinary revenue seen during the pandemic. Instead, the company is focusing on its broader product pipeline. Moderna is developing vaccines and medicines targeting areas such as REV, influenza, and cancer. If these products successfully reach the market and gain significant demand, they could create new sources of revenue. However, developing new medicines requires significant spending. For 2026, Moderna plans to invest approximately $3 billion in research and development. R&D is one of the most important expenses for the company because its future depends on successful scientific research. This money supports clinical trials, laboratory research, product development, and other activities needed to bring potential medicines to patients. The company also expects approximately $1 billion in operating expenses. These costs include activities needed to operate the business, commercialize products, and maintain the organization. The financial challenge is finding the right balance between cutting costs and continuing to invest. If Moderna cuts research spending too aggressively, it could slow down the development of future products. If it spends too much without controlling costs, losses could continue and cash reserves could decline. Therefore, the company's strategy is not simply to spend less, it is to spend more efficiently. The basic financial plan is: reduce unnecessary costs, protect cash, invest in important research, launch successful products, increase revenue. Moderna also needs to manage its cash carefully. The company had approximately $7.5 billion in cash and investments at the end of Q1 2026, giving it significant resources to fund its operations and research programs. However, those reserves are not unlimited. If the company continues to generate losses for several years, cash could gradually decline. That makes successful product launches especially important. For investors, 2026 is therefore a transition year. The company is moving from a business heavily influenced by COVID-19 toward a more diversified biotechnology company. The success of this transition depends on clinical results, regulatory approvals, product launches, and customer demand. Revenue growth of up to 10 would be positive, but investors will also watch expenses and cash flow. Growing revenue is useful, but sustainable profitability requires the company to eventually generate more money than it spends. Moderna's 2026 strategy can be summarized simply: control expenses, invest in innovation, develop new medicines, increase revenue, move toward profitability. The key business lesson is that growth does not always mean spending more. For a biotechnology company, sustainable growth requires smart investment, cost discipline, and successful products. Moderna remains a high-risk, high-potential biotechnology stock. The company has strong nanotechnology, significant cash resources, and a large pipeline, but its financial performance is much weaker than during the COVID-19 vaccine boom. The biggest challenge is declining COVID-19 revenue. Moderna now needs to prove that its newer products can create sustainable sales and eventually improve profitability. The company is investing heavily in research and development, particularly in vaccines and treatments for REV, influenza, and cancer. This creates financial pressure today, but successful products could generate much larger revenue in the future. Moderna's business therefore depends heavily on its pipeline. A successful clinical trial can increase expectations for future sales, while disappointing results can reduce investor confidence and put pressure on the stock. This makes Moderna different from a mature company with predictable earnings. Investors are paying significant attention to what Moderna could earn in the future, not only what it earns today. The company also has substantial cash and investments, giving it more flexibility to continue funding research and development. However, cash reserves can decline if operating losses continue for an extended period. For shareholders, the central question is whether Moderna can successfully transform its scientific technology into a diversified commercial business. The potential upside is significant. If several new vaccines or cancer treatments succeed, Moderna could create multiple revenue streams and reduce its dependence on COVID products. The risk is equally important. Clinical trials can fail, regulatory approval can take longer than expected, competition can increase, and new products may generate less revenue than anticipated. Therefore, Moderna can be viewed as a growth and innovation investment rather than a traditional profitable pharmaceutical company. Its financial story follows a clear cycle: mRNA technology, new medicines, clinical trials, regulatory approval, product sales, revenue growth, profitability. The most important financial goal is to complete this cycle successfully. If Moderna develops successful products and controls its expenses, the company could gradually move towards stronger revenue and profitability. If its pipeline underperforms, the company may continue experiencing losses and declining cash reserves. The key business lesson is: innovation creates potential value, but successful commercialization turns that potential into real revenue and profit.